All right, welcome back. You're watching Street Smart on Bloomberg TV. And joining us this morning now is our Sreesankar, Head for Institutional Equities, our Prabhudas Lilladher. Sri, thanks for joining in this morning. What are your thoughts in terms of market strategy? I mean, we've had a decent run-up in the last couple of weeks or so. This entire past week has been more about a consolidation zone. But going forward from here, what's the outlook?
Again, outlook is going to depend upon two factors. One, for the market per se, what is going to happen in the domestic environment, especially post-elections, and what's going to happen in elections and post-elections. That's number one. And number two, what's happening on the global front as well. So now, if you look at the last 1 month performance, and especially even the 1 month performance of the entire emerging markets and the developed markets, you've seen along with India, there is another market like Indonesia also, which has done pretty well. Almost similar kind of an upside which you have seen in the markets. So global markets have generally done well. The question that we keep asking is that, is it the flow that we have seen is, again from FIIs, is any exchange traded fund flows have happened? That's the first question. Second, obviously as we come towards the election date, as we come closer to the election polling dates, etc., the ground realities will be much more clearer. Who's going to get a majority, and are we going to have a decisive government with a clear majority, and so on and so forth. If we are going towards any front which is with a clear majority, I think these markets will continue to move up. So the markets have moved up based on those indications. And if the indications becomes much more stronger towards a polling date, or probably by the time you see the results, then this market is going to be in a different level altogether. These are the two factors which I think is going to drive it. So what will happen to the market per se? From my expectation, the E will not undergo any change. Earnings will not undergo any change, probably for better part of the next 2 quarters, not 3 quarters. Whereas the price will move up quite substantially, and the PE will expand also quite sharply. And that's what we are seeing today, and that probably will end up happening again.
Sure. She just hold that thought. I'm going to get a little bit some of these stocks as well. You got Infi still trading weak, but currency, I know that one also seeing a little bit of weakness today.
Global pressure, that was expected, given what's happening with the Russian concerns, with Russia and Crimea, what's happening with China as well. The rupee taking a bit of a beating today, 61.49. Watch out for 61.50 as traders are telling us. A decisive break back towards the 61.80 will make the currency a lot weaker. Abhishek Goenka on the phone line with us right now. Abhishek, thanks for joining in this morning. What's the rupee range that you're looking at? Every time we've gone and strengthened considerably to 60.50, we see a strong pullback. As we head into a long weekend, what would you be suggesting and to do with the currency?
That's right. That's right observation. You know, below 61 levels, I guess all the importers gets into the market and start buying, and it's a psychological level now. And the way it's been moving up, you know, it's supported by some solid facts. If you look at the U.S. data yesterday, it was amazing. The retail sales unemployment numbers, the jobless claim numbers which came in was like 4-month low. And also in the Chinese, what you rightly said just 2 minutes back was, you know, there are a lot of concerns and a lot of speculation in the market on the debt default in the Chinese markets, which is again deterring investors all across the world. And the latest numbers in terms of growth in investment, retail sales, factory output, all fell to the multi-year lows. I think the local data are coming in good, because of which the rupee got extremely strong in the last couple of weeks' time. But now I think the market is kind of discounted that, and the market is getting a little weak. So overall, I think since the Asian stocks have been weak, the emerging markets are not doing very good in terms of currencies. I think rupee again is kind of getting sold off, and I think on the medium term we are still looking at a level of 63 to go by, and any level below 61 or close to 61 is a good level to buy for importers.
All right, thanks for that, Abhishek. In fact, the rupee is the worst performing emerging market currency for the day, but we have been the best performing over 5 days. So some money being taken off the table, but watch that number carefully towards noon. WP at 12 o'clock. So that will probably make the money markets move a bit.
And well, we've got 2 out of 3 already that have been on the positive side. So the third one is awaited today. No, thanks for getting us those updates on the currency market. But well, we've been in conversation with our Sreesankar from Prabhudas Lilladher. Sri, now let's get a little sector specific. The IT pack stands out in the pre-open as well today. Once again, Infosys rather actually getting a little bit of knockdown is what we're seeing. What are your thoughts when we talk about the kind of commentary, the kind of news flow that we picked up on Infi and for the IT sector as a whole?
See, there are 2 factors out there. Infi probably has had a great run ever since Mr. Modi came back into it. I think it was up 40% from last year onwards, etc. So now, if the news flow is towards probably saying that the earnings growth is going to be, earnings estimate is going to be put towards a lower end of the guidance, people would have taken it as a short-term negative, and the stocks have definitely come under pressure. That's number 1. Number 2, expectation is built upon Mr. Modi's ability to deliver, and it is kept very high. So this is something which the market was not probably anticipating. That's the second fact. And a third, more importantly, is pharma as well as IT has got a huge impact in terms of when the currency strengthens. And Rupee has been strengthening for some time, and not a big way, but in a slight manner. So that also has had an impact. So our own call is, if you continue to see the economic growth, if you're bullish, you're going to come back on an economic growth, etc. You're going to have this current account deficit and the trade deficit, etc., which you got under a manageable scenario. Your oil import starts to grow up, and all these things can change quite dramatically. The other factor is, you also seen in the shorter period in the last few weeks, large amount of money coming in, not only from an FII perspective but also from debt perspective, not only in equities but also in debt. That, to my mind, is actually a short-term money, and it can come in, it's hot money, it can go out. So that doesn't give you any kind of a long-term strength for the currency. I don't know, and so one needs to be extremely careful around playing with these things in a short-term flows can dictate the direction of the currency in the shorter term. But I don't think I'm going to take it as a long-term guidance which will be saying. So our own call is, we still overweight on IT and pharma. Probably it would have underperformed in the near term. But what will happen is, the expectations itself on the market or on a new government coming in, that will result in the economic growth getting restarted and growing faster, will flow down to industrials, capital goods, infrastructure, you name it, all those things. I think it's going to take a lot of time.
What about banks, Sri? Because we've been looking at that pack as well. Recent run-up in some of those stocks. Does that figure on the list too?
See, if economic growth happens, banks should be one of the big beneficiaries of that growth. And that is generalizing that entire financial services per se. Now, that's the macro view. Let's go to the micro aspect of it. Within that financial services, who will benefit, who will not benefit? Theoretically, everybody should benefit. But now, the new generation private sector banks have had a relatively lesser amount of slippages, lesser amount of stressed assets, and have withstood the onslaught in terms of stressed assets and NPA to a great extent. And that has been remarkable. So if you look at the stocks like, be it in terms of HDFC Bank, ICICI Bank, Axis, etc., and Yes Bank, IndusInd, ING, I'm naming a lot of these things, you're seeing the Kotak Mahindra Bank, the valuation is quite different. They have done quite well in that particular segment. Now you look at the PSU band pack, whether it is the SBI is a leader, it has had its, and because it is a leader, any incremental money that will come into that financial services, especially in the PSUs, will first go to SBI, and SBI will have a great rally, and we have seen that also. So in many other cases, the values of these stocks have become probably half or even a third of what it was used to be earlier. there are stocks which used to quote at 1.5 times book, which is probably at 0.8 times book. So there will be investors who will be looking into these kind of stocks, because purely from a valuation perspective, again, when you say the price to book, whether 0.5 is worthwhile, and they probably will look at from a trading opportunity which will be there, will buy into it and probably will get a kicker. I don't see these stocks becoming, at least in the near term, or unless they fix their particular problems, going to be in the long-term portfolio of as a long-term holding in many of the portfolios going forward. I see them as trading stocks. People will get in, make their profit, and then exit these stocks. Sure. So in many of the banks, especially the public sector banks, you are actually seeing this kind of an entry coming in from investors.
All right, Sri, just hold that thought.
Not to forget.
Sure.
Not to forget, we believe that there is going to be a large amount of capital infusion required by these public sector banks, because their capital adequacy ratios are woefully poor.
Okay.
So unless government keeps capitalizing these things, even the growth expectations of many of these banks,
fair.
I don't know.
Fair enough. Sri, just hold that thought. I want to quickly address a pre-open as to what's coming in at. Markets are slated to start the day off on quite a weak note. 0.7% cut coming in is what we're tracking right now as far as the benchmark indices are concerned. They're on your screen right now. 45.